We're looking at S&P 500 mini futures. The time frame is 2000 tick chart. And as a price action trader, I need to correctly identify the market structure. I can see that the structure is a clear bearish downtrend. Exponential moving average is 21 bar, EMA is pointing down. Price is trending for the most part below this exponential moving average. We keep creating series of lower highs, low lows. And now the task in front of me is to correctly identify the pattern, to correctly identify the channel, because price is always in some form of a channel. Price is never naked and alone on the chart. So my goal is to find the proper channel. I have few channels drawn. There's a downtrend working lower with the break, push to a new extreme, another leg, another move to a new extreme. So according to price action trendline rules, after you get a break of a trend line, traders will retest the new extreme. But now we keep pushing lower, and this is telling me that the downtrend is stronger than I initially expected. So I'm looking for additional channel, but right now I have to be careful because this move was quite steep. And when you're starting to get into oversold territory, you can have a stronger correction to the upside. So right now I have a potential channel, but unless I get a third confirmation of this channel, I'm not really fully trusting the channel just yet. All right, traders, so I just entered a double trap entry of the key entry point, and I forgot to record the beginning of the trade. And you guys can see our runner may get stopped quickly. But what I liked about this trade is that we had a new low right here. We had a first entry short, second entry short, which is a two-legged pullback high probability setup in a downtrend structure. It is at the exponential moving average at the key entry point, but we didn't get the trigger below this big bearish bar. Price didn't trigger, pushed higher, and now created a double trap entry, meaning everybody who went short too early below bullish bar, which is you cannot sell below bullish bar. I'm selling, I want to sell below bearish bar. So they got trapped. Everybody who went short too early, they were aggressive. And everybody who's going long too early felt second entry short below EMA in a strong downtrend structure. They got trapped as well. Now, exponential moving average kept holding price. The main trend line kept holding price. Structure is a clear bearish downtrend. So you guys can see I'm following the trend. Overall structure is bearish. I got my key entry point, and once price pulls back to my key entry point, this is the point in the market where I expect for price to turn. So once price turned at the key entry point and offered me a great big bearish bar below EMA, I chose to take this entry. Even though the short-term option is in play, I decided to risk this entry. Trading is about probabilities, and this was our first trade for the day. Price created a break, new extreme of this downtrend, and according to trendline rules, we expect correction or possible reversal. However, if I take into consideration the entire structure of this market, this is a strong downtrend working lower. I'm still hesitant to take into consideration a possibility of reversal. In fact, I'm still leaning more towards bearish bias, because once the downtrend is this strong, it is possible that you're going to keep creating series of lower lows consistently. Now we had a new low, first entry short, second entry short, but you're above EMA, the uptrend is in play. And we just had a break and new low, so I cannot take it. But then we had a lower high that was tempting, but we didn't get the trigger below this lower high. And even then, price is a little bit too stacked. You guys can see right now we're finally a little bit pushing higher, so we may correct for two-legged correction. This is how market likes to move. First leg, pullback, second leg. And we will see if downtrend will resume. I'm still leaning more towards bearish bias, because once the trend is this strong, price is creating series of lower highs and lower lows so consistently. Market is really weak, so I'm still leaning more towards bearish bias if we push below EMA. And if not, then I'm just gonna wait and price will reverse, and then I have plenty more opportunities to buy the market. But as long as there is no proven trend in opposite direction, I cannot just reverse this big downtrend on the spot. All right, still sitting here with my one trade. You guys can see after breaking a new low, price is correcting. This is the typical correction phase according to price action rules. You guys can see price action is working perfectly. Price is making its way all the way to the key entry points. After there's a break, new low, price is correcting. Right now we're in a small little trading range. Uptrend working high, little break, new extreme. Right now I'm being a little bit more patient because we have a double bottom here. The bearish momentum is a little bit lacking. At the same time, I'm hesitant to go long just yet. I'm not taking this failed second entry short just yet, especially after we have already break a new high. So I'm just going to be sitting here patiently. Potentially, if we get one more lower high or failed second entry long to get last push down, because this was still a strong bearish structure, I might consider this. But this is how you're following the price action. It is telling you everything you need to know. You're just drawing these trend lines. You're waiting for setups at the key entry points for two-legged pullbacks, and you're waiting for these short-term corrections to play out. They will keep you on the right side of the market. All right, traders, we have a lower high setup below the exponential moving average after second entry short, but I wanted to see more bearish momentum. I found this flatter channel. You guys can see we have a first channel working lower that corrected into a trading range. We broke lower, and now price action is getting more flatter, and this is typical for these big trend days where you will have your main channel and eventually price will go into a flatter channel, because price cannot just work under such a steep angle down like that. So price created up to working higher, break new high, two legs to new extreme, on a larger pattern and price at first leg pullback, second leg, first leg pullback, second leg. So there are two-legged pullbacks inside of a two-legged pullbacks. So we reset the count here and we have a second entry short that confirmed the channel. Strong push below EMA, but I want to see a more bearish signal bar if I want to go short here. Alright guys, I'm resuming the video as I'm going to take a second entry short off the key entry point and below exponential moving average. I'm going to go for 8-tick target profit. You guys can see price created a new low, first entry short pullback, second entry short, big bearish bar below EMA, and we got out. Perfect. So I moved our runner into a break-even position where my initial entry was, because right now the runner is just a gravy and anything I squeeze out of this market is just a bonus. And I like this entry because uptrend had a break and a new extreme. We came off the major trend line. So this was the key entry point that I found eventually, because this first initial channel was very steep and it is completely typical on a strong downtrend where you will get a steep channel and price will eventually flatten a little bit. I'm looking for entries off of this channel as well. And it was a second entry short, big bearish bar below EMA. Market likes to move into second entry short under the right context at the key entry point is a high probability setup. So the context is great. Uptrend played out and the EMA got a little bit flat, but once the structure is this strong, such a strong bearish downtrend, you have to take the entry. So I'm going to mark this our second trade for the day. There was a failed second entry long, but bar ended up neutral doji. It was so stacked, so I hesitated. First lower high had a bad signal bar. The second failed second entry long had a bad signal bar as well. Price pulled back a little bit, and then it gave me the nice signal bar that I want to sell below. And this channel seems to be holding, so we'll see if we can squeeze something more out of this runner. All right, traders, we're getting some serious runner, and what I'm going to do, I'm going to tighten this very tight. Yesterday I was 1-1 and I ended up a little bit red. I'm squeezing as much as I can out of it. If you trigger right now higher, I'm not too bothered about this. I already made my portion. I already got my bonus. Remember, runner is just a bonus. You're holding the runner just in case you catch unexpected move in the market. And this is exactly what you're hoping for. Key entry points are holding price. And notice, this is why you're looking for these key entry points. They will produce the place on the chart where price will bounce off of them. So once I see my trend line, one swing, second swing, third swing, and fourth swing confirmation, very close to having a fourth swing confirmation. I could have drawn it slightly tighter like this. It would be great if we can squeeze a little bit more out of it. I want to talk about this briefly. Some traders are asking me, why am I using limit orders? Notice my entry is 2 ticks back than you would have had if you would enter at the close, and 3 ticks back if I would have entered using a stop 1 tick below the signal bar. And notice, if I'm going to use the limit order at the very close or potentially 1 tick below the signal bar, price would have came back, stopped me out, and then went exactly where I thought it was going to go. So I'm using the limit order because I'm decreasing my risk. You guys can see I'm saving myself 2 ticks if I put it at the close, and or 3 ticks if I'm using a stop. I'm decreasing my risk and I'm making it easy for my target profit to get filled, because price doesn't have to move so far off the signal bar. Since my entry is a little bit further back, I basically need for price to create just a smaller move, despite the fact that my target profit is 8 to 10 ticks. So this is why I like sneaking a little bit back. And notice price would have come back, stopped me out, and then went lower. So once you're using limit order, you give your runner a little bit more opportunity to survive these little pullbacks. And the ES is very efficient. The market likes to come back, hit the break-even stops, and then continue pushing lower. So you guys can see sometimes I get unlucky, I get stopped out just to the tick. And sometimes you guys can see I survive by 1 single tick and you get lucky. So you never can take trading too seriously, too personal. Sometimes you will survive, sometimes you won't. That's just a part of this business. So let's see if we can keep pushing a little bit lower. But right now it is just a bonus. All right, traders, and we are having a fantastic trade. What I'm going to do, I'm going to tighten this again. You guys can see we are reaching 20 points and we're at the bottom of my channel. I may actually squeeze really as much as I can out of this trade right here. 18 points or something around that, because we're really far away from EMA. And I don't want to wait for price to create a swing. We could continue keep pushing lower the entire day. I'm aware of this. But once you see 20 points in your account like that, almost, you're really tempted to exit this. So since we are so far away from EMA, after price gets far away from this, since we're at the bottom of my channel, I'm going to tighten the runner as tight as I can. At the same time, you guys can see I'm still giving it room in case market does something unexpected. As of right now, I really didn't expect for this leg to continue pushing lower like this, but it's happening. You guys can see I'm going to tighten it even more. Let's go. This is fantastic runner. Right, resuming the video as I'm going to tighten this slightly more The market just keeps falling and keeps surprising me. There's a bearish downtrend working lower like this. So you guys can see this downtrend right now is holding price. I'm going to really tighten this right now. We're really far away. 23 points. And we got out. I want to quickly talk about the count here because a couple of traders were confused with the count. The price is pushing higher, and below this bar, we broke below this bar low, and this created a first entry short. You guys can see there's a 2 ticks below this bar low, creating a first entry short. So first entry short trigger on this bar right here. And price reversed higher, didn't stop everybody out just yet. They got stopped on this bar right here. There's a little tick that is higher than, it's going to be really hard to see. There's a little tick that is higher than the high of this bar and then this bar. So everybody who went short on the first entry short, they got stopped out here. Price quickly reversed, and once price broke below this bar right here, second entry short trigger. Of course, I don't want to sell below bullish bar because I'm short biased, so I want to wait for a signal bar in my direction. So technically, after price broke below this bar right here, the second entry short truly triggered. So there's a first entry short, trigger higher, second entry short. Visual legs looking like this. First leg pullback, second leg. Market keeps eventually pushing lower. So I'm going to wrap it up with my 2 trades. This trade was absolutely a fantastic trade. The first entry was slightly aggressive because uptrend is in play, but it confirmed the trend line and there's a little break. At first, I didn't like trusting this channel because the break is quite strong and big. But a lot of times during overnight session, price tends to ignore these breaks. So once it got confirmed here, and now this is a 4th confirmation, you pretty much have to take it into consideration because there is no other channel that I would have liked. All other channels just were so far away and price would have had to pull back a lot to the key entry point. So this channel ended up holding. Notice how it confirms the bottom as well. So once price came here, 2 key entry points, double trap, and price corrected. There was a lower high, but it had bad signal bars, so you cannot take it. And then price created the second entry short. Uptrend played out with a break in new extreme. Key entry point got confirmed now. Key entry point got even confirmed here. But this is the 4th confirmation, which is telling you that the key entry point is strong. Already 3 confirmations are enough. But 4 confirmations is really strong. Uptrend played out with a break new high. Second entry short. Structure is still strong bearish. You're not even thinking about buying, honestly, when you're looking at a structure like this. There was no chance to enter here. There was a lower high, but all the way down these lows. Same thing for the failed second entry long. I'm going to wrap it up. If you made it to the very end of the video, that means you're enjoying the content. So like the video, subscribe to the channel if you haven't. I'm going to see you guys in the next one. Take care, everybody.